Good morning, good morning. What's going on, everybody? I'm good, brother. I'm good. Listening to a little 3-6 Mafia to wake up. Gotta stay fly. Gotta stay fly. Happy Friday, everyone. It's a good album. Helps me wake up. Charles, what's up? Charles in charge. I still remember that TV show. How you doing this morning? Oh boy, it has been. It's been a crazy month. January just was all sorts of drama. Let's see where we're at when we're back to this balance. Ian, how you doing, brother? Jam, what's up? Jam's caffeinated. What are you doing awake? Is this a here we go again situation? All right, ladies and gentlemen, we're back in that 2363 larger balance zone. We did a look below and fail, went right back to the top of it yesterday. Yesterday, a nice trade was 23 to 63. That was a decent rotation. Back down now. We closed up at the 69.90 for month end. And then you can see you get that high close. Right? This is very common. A market comes off a low and then just blasts up. There's a high close. The night after, you'll see some short covering, and that's what that is. We're backfilling, right? That's normal. So it actually would be normal to test 69.23 on the downside when London opens, right? We had a little bit of selling in the last half hour. So, but once again, we're back into this cost basis. Now, I've put in the reason I'm using overnight profiles, which I normally don't, because I wanted you to see how clearly you can see the cost basis, right? It is so clear. We took this and we sold it up here. We put it on sale. We had a little bit of a fire sale yesterday. And then the sale didn't last long. High closed the market. Now, month end, everyone's happy because we closed close to 7,000, right? And now, the last day of the month, the wholesalers get to clean up their positions, right? So we have sellers at 69.73, 63, all the way down the range, down range, we've got sellers. And that's okay. That's good. So let's go take a look and see what we're looking at. I've got VWAP's all the way up here. We're underneath VWAP. I did a 43 to 50 balance, double it to the downside to 28. You can see that there's sellers all over the place tonight, which is good. There's nothing wrong with that. Markets need liquidation too. Hey, Nate, Jerry. Hey, Redcom, how you doing? Hey, Phil. Oh, last time when we had those big sell orders about, I guess it was about an hour ago. They took us down to 35 and three quarters, and we're gonna go play with that overnight low again. You're less sick? Oh, that's good. Yeah, let me know when you feel better, brother. This flu is a horrible one. Mm. So if we take out 69.35, I'll be looking for 28, which is right here and right here. Right. Now we have a poor low in the overnight, ladies and gentlemen. That is what we call a poor low. A poor low is also called a double bottom. And all it really means is that the buyers are competing at that level. So generally, the trade there is to buy the poor low, right? And then you put your stop underneath it. So, you try and buy as close to 35 as possible. And if that poor low breaks, your risk is right here, right? So if you're buying, maybe you screwed up the execution, you're long 36, right? You use the candles to tell you whether that low is going to hold. You see? So say you bought 36, 37, or I mean 36 and a half. Well, you can see that the sellers are here now, right? So that might break. And that's how you manage your risk. See how it's breaking? That's still a poor low. It's one tick of excess. Right? The nice thing is when the market goes up, comes back and leaves a poor low, that's a nice buy because you're in an uptrend. We have liquidation tonight, so that poor low might not hold, right? And that's how you manage your expectations around that. Right? Because trading is all about risk and managing expectations. It's not about profits, right? It's about profits once you get skill. But before you acquire skill, trading is about risk. See how it's kind of lingering here? I don't trust that. Right? I'm just naturally suspicious of a low. Because I've been known to come in and sell size at a low. But that's just me. Don't let that influence you. Watch the chart. If that low holds, right, we'll move up to 37. If it breaks, right, we'll be looking for 28. So, that's one of the things. If you see a low holding, but you see how we're loitering there, right? The better trade is to wait till it clears 37, because then you let the larger traders work this area out. But if you do take a flyer, your risk is right here, right? So, you know, right? I bought a couple at 36 and a quarter, and I'll put one out at 37 and a quarter, at 37, and I'll just sell on the way up, right? I'm not looking for much. I'm not looking for much, right? And I'm flat, right? So I bought 36 and a quarter, and I sold. The best print I got was 37. It's not the greatest trade, but I'm just testing it with micros to see if it's working, right? You got to go in there and put your fingers in the dirt a little bit, right? But you know that there's a seller at 37. Look, we just proved it, right? Simplest way. to trade is to just watch those candles, right? The candles tell you so much information. It's scary. All you got to do is listen and pay attention. Now, typically, damn it, I'd like to see some size. See how it broke? So all that was one trader went, F it, and just hit it, right? They had a sell order here, and they're competing with other people, right? Here, and they just went to hell with it. Boom, and hit it. So we no longer have a poor low. The next set of buy orders are going to be down here at that stop. Hey, Harris, how you doing? You back in the UK or are you still in Greece? A little responsive buying off that overnight low. Right. So now I'm really not interested into a trade until I see it maybe do a look below and fail of 28. I would participate with that. But right here, when a market's working out a low, I like to let the large traders work that out. It's just more, it just makes more sense to let the large traders work out a big area, you know? It's like after the snow. Ah, Manchester. What a lovely airport that is. Just kidding. It's not. You have to like walk forever to get to your gate. Ugh. Ooh. Where's the overnight point of control? Where's all the inventory is all up here. 1,423 contracts up at 69.68. Let's see if we can move that down. Do some accumulation here. 37 sellers still present. Look at that. See, folks? You see how easy it is to know where the seller is going to be if you're long? Hey, the 80s were good, Harris. It's about time. You know, when's someone going to invent a time machine? I'll go back to 1984 any day of the week. Best movies, best music, man. Classic movies. Oh. So we have sellers at 37, 37 and a quarter. Yeah, I graduated at 86. And what a glorious time it was. No kidding. Van Halen, you know, little Van Halen, little Def Leppard, and lots of Iron Maiden. All right, let's go test this overnight low again. Oh, So, folks who are joining us on YouTube, you're wondering what the hell I'm doing, why I'm not trading. Because this is an area where when a market puts in a low or a high, retail, you don't want to be around there. You really, really want to let the large traders, pretend the large traders, if any of you live in areas where there's snow, and there's a huge, heavy dump of snow, you wait for the snow plows to come and plow the road before you attempt to drive. Oh, 1986? You were born? Oh, brother, 86, I was getting into lots of trouble. 86, I was getting into a lot of trouble. Paradise at the dashboard light. You got it. Definitely, Brad. 86, oh yeah. 87, 88, I was living in Hawaii. I came back to Canada. Oh, and thank God, Harris, we didn't have cell phones or cell phone cameras. And thank goodness for that. That's called evidence. So we're sitting here waiting for the large traders to work out this low. Thank goodness, yes, yeah. Oh yeah, foreigner. Foreigner 4. See, we're kind of, if you hear me talk about balance and cost basis, we're sort of establishing a little mini cost basis here, going back and forth and back and forth. And what's happening mechanically is that the sellers from above, they don't all sell at the same time, right? People trapped above 39, 40, 45, they're not, they'll sell at all different times. So I want to see if this 37, if the market lifts, right? Say the offer lifts and we print 37 half, 38. See, look, there's a little print there, little sign of life, but the sellers are still there. They're not horribly aggressive, but what they're doing is they're buying 32, 33, 34, and they're flipping it out at 35, 36, 37. You see, that's the market maker way. This is what we do. After a liquidation, when it slows down, we just trade this box and build a position. So we'll be buyers under 34, 35, and we'll be sellers above until we have enough position and all the selling stops. Then we'll take this and we'll go try and sell it. We'll try and sell it up here, right? And now you might think that's not a lot, but if you bought 300 contracts here and you can sell 300 contracts here, right? If you're net long 300 and you can get out of 150 here and 150 here, that's good money, right? That's really good money. And that's how wholesale operates, right? So it's Friday, last trading day of the month. Once again this week, I've just been taking trades with the micro. Next week I'll be back on mini. And, looking forward to a new month. See how resistance should become support now. If it doesn't, it means the sellers are still competing. Does that make sense? Because once we had this position, we should not drop under 37 again. The fact that we are means that the sellers are still competing at that level. And there's not enough buyers, right, to increase price. How do I know I'm back on minis? Well, TradeMaker, remember I was sick for 2 weeks, so I had a fever. I was seeing visions, right? So I didn't trade. This week I just traded the micro because of the Fed, and my brain is just coming back online after being sick for 2 weeks. So I'm going to let month end pass, right? And see whether my brain is working. I'll trade the minis. And, if I lose 20 or 30 bucks, it's okay. I'd rather lose $30 than 300, right? Because when I haven't traded for a couple of weeks, it takes me a little while to kind of get back into the groove of things, and it takes me a little while to get, um, it's like when you reboot an old computer, it takes a while to boot up. It's the same thing with my brain, right? I'm getting old now, right? So the way I trade is I always test to see whether my brain is working using the micro. And then if it is, beautiful, then I can use the mini, right? Because you know me, I'm cheap, right? I'm really cheap. So I mean, for me to lose $300, that's like somebody losing 50 grand. Like I don't, it's like, so I'll trade with the micro. I lose 10, 20, 30 bucks. That's okay. I can take that, right? But, you know, when you've been taught how to trade by billionaires, who take the bus and buy 3 suits for $99, you tend to be a little on the cheap side. See that 37 sellers there. See, you don't need a DOM or a footprint or a nose print or bookworm or any of that crap to know that there's a seller at 37. The candles are telling you, right? How easy is that, folks? I mean, come on. All you got to do is draw a line, right? So all you got to do is be able to draw a straight line. And guess what? It's free, right? Free is good. No special software, no special order flow trading course, right? Right. It's just simple business, brother. Simple business. And know when to leave it alone. Exactly. Yeah, we're just kind of chopping around here, trade maker. A little bit of balance. This is very boring for a lot of people. But if you want to learn how wholesalers work, this is a great little sort of mini class on how that all works. Yep, you got information there, right? Now let's see if that 69.32 low holds. Now London's coming along soon. Let's see if they put the kettle on. Now, this is kind of hard to trade unless you're right at an edge. Right? Let's see if that low holds. There's a bid at 32. One thing you can notice is when a market comes down to a level and the offer lifts, right? Immediately, that means that it's the market has seen buyers under that level, and it's trying to coax them up, right? See? So in essence, what we have, folks, is we've got another little balance, right? There's your balance. And you could see how you have a little accumulation zone in a larger cost basis area, right? Because on a 1 minute candle chart for the last about half an hour, we've been accumulating in this little zone, right? And that's that back and forth, right? So you've got 32 to 37. Let me go. I think you'll find this interesting. You see there'll be a buyer here. They're going to be buying under 34 half. And as soon as enough buyers come in, when we get over 34 half, 35, they'll flip to the offer, right? And that's how you make markets, right? You trade this box back and forth for size. Now it's going to see if we're going to look below here. Let's see if that bid's still here. If those buy orders are still here, the offer will lift. If those buy, see, there you go, right? Now, if it wasn't a minute to the London Open, I'd go long here. But I don't trust London just yet. So I'm going to wait and see if London opens and takes that low out. Because if it does, we could go right back, we could go right down to 28, and I don't want to be long 32. So I'll let them work that out. Then I'll take another test trade to see whether or not what I'm thinking is actually happening. See, that's why I didn't want to go long. See, they always tell retail traders to be patient, but if you understand why you have to be patient, you're more likely to be patient. What did I say, 28? Yeah, we went right to 28, right? 28 quarter. Don't try and guess what's going to happen here. Just allow it. After a day like yesterday, just so you guys are prepared, it is not unusual for us to go test yesterday's low. Okay? That's not a strange thing to happen. Now we have inventory trapped over 32. You can see it right here. And we have, what do we have here? We have supply. We have single prints. We have an area of supply. So you're going to have sellers up here at 31. This is a little market profile thing, which can help you, right? If we break 28, let's see. Hey, X, happy month end. How you doing? I'm long 29 and a quarter. I'm offered at 31. I'm out at 31. Just one micro. Just to see if my brain's working. Now, if we run out of supply, we're going to go fill up this green box. We're going to go back up into this cost basis, you see? Right? There should be sellers somewhere around here, right? There were sellers here. They moved down here, here, here. See? There's your seller. But we took quite a bit of those single prints back. We ran out of supply. Let's see if we hold 32. A little bit of a fire sale with London, right? So when I bought that 28, 29, whatever it was, I should have bought a little bit more, but I was unsure of myself. See, we're waiting for it to get back over 32 if you want to get long. I'll wait for the next candle to open, right? If the offer moves up, remember they're going to be selling at 34.5, right? They're going to be selling at 34.5, and there they are, right? Boom. You see, you know where the seller is going to be because they flipped to the offer here. Why wouldn't they sell there again? Right? Now let's see if it holds 32. And if it holds 32, as the Penguin would say, we can get some position. If it doesn't, wait till it gets back over 32. Right? Don't try and work this area out. Let the large traders work this out. Right here, let them work it out. Let them find the bid. Right? Your job isn't to find the bid. Your job is to watch the large traders find the bid, and then if your business setup is present, then you can do some business, right? Now watch, right? See, you buy 33. I'm selling 34 and 3/4. I got 2 left. I'm out of my last contract at 35. Right? So I waited for it to come back up. I didn't buy 32. I bought 33, and I'm out here. Right? Quick scalp. Right? Filled the single prints because we ran out of supply. See, the trade is simple. The execution takes some time because until you understand the dynamics of what's going on, it's very hard to execute things when it's a theory, right? That's why book smart and street smart are two different things, right? And, you know, if you're book smart, that's great. Let's take you and make you street smart, and that's a killer combination, right? See, if I didn't sell 35s, I'd be, you know, oh, it came back and took me out at break even. What's the point of even doing business for break even? Right? Take your profits. It's not a lot. Right? And if that doesn't work for you, then don't take the trade. But I'm just showing you guys how to take trades. Right? The A plus setup is here. The look below and fail. Because it's right at the edge of the cost basis. This is scalping once you see the business. Don't be surprised if we go test that overnight low again. See? Look. That's why when you're trading around a low, if you decide to do it, you've got to be quick, right? And you don't want to be you want to be short-term greedy. You don't want to be long-term greedy when you're mucking around at an overnight low, right? Get in, get out, get paid, and then take your hand out of the cookie jar. Okay? How do I draw my cost basis, David? Very simple. If you're just joining us, you see a seller here and you see them stop selling here. So that's a cost basis. And it has to do with the business of market making. Right? So say you'd come in now, like I drew my cost basis earlier this morning. Mine's 43 to 50. But there is a mini cost basis here. So if you drew this, you would double it to the downside to give you a lower target. So if this breaks and we get under 28, your target's 21 and a half. So I have a couple of hundred videos. I have like 400 videos on this YouTube channel of me drawing these cost bases, trading them, right? And if you're interested and you want to learn how to trade with some common sense, without all the double talk and mumbo jumbo, come give us a shot at the Trading Syndicate. Because right now, we're running a $19 special for a month, which is we're pretty much giving away the room for free, right? And you get our AI trading coach for free. So you get a 2-for-1 for less than a visit to Starbucks. See, there's a good. We went and tested that overnight low again, right? And I call it inventory, David, because the whole world calls it inventory. Retail traders don't know what inventory is because they've never actually worked in a market. But anyone who's actually worked at a brokerage firm would have had an inventory, right? Because it's a market, right? You have an inventory of goods that you sell. In this case, it's ES contracts. So you look for a low and a high, right? And when you look below that low, you go back to that high. There's your cost basis, right? And that the wholesalers, what they're doing is when the market's liquidating, you know, they're buyers under 34, they're sellers above it. Does that make sense? Hope that answers your question. If you want more in-depth knowledge on how to do this, come check out our trading room for a month. It'll be the best 19 bucks you ever spend. Everything we do is based on the business. We don't have any BS technical indicators and, you know, all this stuff. It's all based on business. This could be a look below and fail. I'll wait till the next candle. I know there's going to be a seller at 30, 30. There we go. Oh yeah, check this out. You want to check out higher time frames? Look at this. So my big traders, what they did was they did the look below and fail of 69.23. So I have one of my traders who shall remain nameless, who went in yesterday, and when the market came back above 69.23, he bought himself a position here, right? He bought somewhere between 50 and 100 contracts when it cleared 23. I think his average was like 33. He just used my levels, right? And he sold 10, 10, 10, 10 on that rotation up. Because what it is, it's a look below and fail, which means rotation right back up. So here's the look below, here's the fail. You wait for it here. You buy it here, right? Say you're long 50 contracts between 30 and 40, and you're selling them all the way up to 53.60. That's a nice trade, brother. Right? This is how the business works. Right? The look below and fail is the oldest trade in the world. The reason is, what's the business reason? The sell orders that take the market under 23 are completed. So you can go in. This is how these big traders make 30, 40, 50 million dollars a month. Because they go in and they buy thousands of contracts when the sell orders are done and sell them into the strength that is created by a lack of supply. Right? So right there, say conservatively, right? you didn't have to take the whole zone, maybe 30 to 53, right? Say maybe to 30 to 50. So 20 points, $50 a point, that's a grand. 50 contracts, that's a $50,000 trade in an afternoon, right? Now that's not for somebody trading, you know, a prop account, right? That's for somebody who's trading with millions of dollars and has the skill to manage the position. So what I do is I teach you guys how to do it here. See, there's the same trade. You see? This is the same trade on a 1 minute. That's the same trade on a daily. Right? Where you put your stop loss here on this trade, right? If I had the candles up, we would have been long 30, stop 28 quarter, sell, sell, sell. Right? And we would have been out by 37. Now you might not think, say we made 5 points on that trade, right? At $50 a point on the mini, that's $250. 8 contracts, that's 2 grand. Do that trade once a day, you're making 40 grand a month. How do you like them apples? So the trade, every business decision, right? Every trade is a business decision, right? There's a reason to take the trade, right? It's not based on random bullshit. Excuse my language. The sell orders that took the market under 28 are gone. So that's where your risk is. So if you're long 30 and somebody comes and sells the product at 26, your inventory is mispriced, right? If your inventory is mispriced, you must exit the situation because the business loan no longer supports your thinking. Now, if this works, if we have the position under 37, we're going to go and sell it, and your target to the upside is going to be 47 3/4. See? It's simple because it's business. People forget that these charts are sales charts, and these charts track the accumulation and distribution of inventory. That's what trading is. Right? As much as these guys on CNBC and the stuff shirts, right, they go and they talk about this. Now, if you were looking for a short, you're shorting under 37.5, and your stop is right there at that top of that candle. And you're going to put buy orders in here at 34, and you're looking for rotation down, right? Because this is a look above and fail. So the target is 32, and your risk is very, very tight. So if you're short, say 36, 36.5, and the market offers over 37 like it is now, then you know, oh crap, I better get out of this. You can get out even before it takes your stop. So this is the smartest way to trade. This is the way people used to trade in the old days before computers. Right? See? Your risk would have been maybe 3 or 4 ticks. So you don't get, you don't take on unnecessary risk. Right? I like to trade the box back and forth. Right? So you could use it for shorting, you could use it for going long. Now breakout traders can use it too. If you're a breakout trader and you're buying a breakout of this, well, you know that there's going to be a seller here. You see the top of that candle? You know there's going to be a seller at 40 if you're a breakout trader. See how they're selling before 40 at 39? So say you bought 37.5, you could sell a little bit at 39.25, put another sell order above here, and if that order doesn't get taken, get out of the trade and take your money. Right? I teach people how to make money with common sense. It's very simple. The execution is not, because you have to practice it. But if you keep your, if you keep your analysis simple, right, you know where the buying is, where the selling is. So had we gone long 38 on a breakout, I'd be out at 40, 39.40, right? Because you have to be realistic about your trading targets, right? This whole, I'm going to risk 1 point to make three. That's beautiful. But does the chart actually support it? Right? Is the chart saying that you're going to get 3 points? Because if the chart's saying you're only going to get 2 points and you're looking for 3 points, you're going to be sorely disappointed, right? There has to be reality in business, right? And that's what a lot of retail traders lack is the cold, hard facts of reality. The chart is showing you the business transactions. Listen to it. And this is how you don't get stuck in a false breakout. Because you think, oh, it's going to break 37 and go to 50. Well, no, there's a seller at 40. It's got to clear out that 40 seller before it can go, and it couldn't, right? Does that make sense? It's very simple. The simplicity of what I teach really screws people up because they've been programmed to think it's this and it's that and it's this and it's that and confluence and flatulence and look at the NASDAQ to trade the yes and then stick my finger up my nose and look at my book map chart and all of this nonsense where all you got to do is look to see where they sell and where they stop selling, right? That's all you got to do. It's not rocket science. You guys understanding? Let me know. What, according to some, it's sticking your finger up your nose? Okay, Alexander. Come on, man. I had to take it. You left it out there. This helps you manage your expectations because you understand where the cost basis is, right? So you're not buying it at 69.47. You're not shorting it down here at the lows, right? Because you have a map of the market that is understandable, that makes business sense, right? Not some stupid BS theory, right? And then we watch the offer, right? The offer tells you when when the sellers see buyers, they will raise price. When the sellers see the buyers are walking away, just like a store, they will lower price. That's why we call it a market, not a hot tub, right? Look at that. Top of that candle, that's where the seller was, right? It is so simple. And if it breaks through the top of that candle, it means the sellers have seen buyers and they're raising price because they didn't just fall off the turnip truck, right? They want to get paid more. See? There. Now, does it stay above that white line or does it stick the white line and go to the next white line? See how simple it is? False breakout, purge, next breakout. They stepped in again under 40. Look at that. Wait for the next candle. Watch that red line, watch the white line. If the red line can't get above that white line, it means that the sellers are marking down price. Just like the blue light special at Kmart. See? This helps you when you're shorting too, because when you see sellers lowering price from here to here, and when the next candle opens, if they lower price to here, you know they're lowering price. That's what creates what you guys call a trend line. So when the trend line goes up, it means the bid is following the offer higher. When the trend line goes down, it means the offers are competing and lowering price to capture the buying, right? See? Now the position from 32 to 37 is underneath us, right? So what's a wholesaler to do? Well, go sell it at 41, right? Let's see how many people we can sucker into buying it here. If we can't, we'll put it on sale. You guys understand what I'm talking about? Hope this works for you. If it doesn't, you need to simplify and clear out all the junk in your head, right? Because unfortunately, a lot of retail traders have been taught just stupid, bad business tactics. And because they've been taught by people who don't understand the business. If you're learning from someone who blows up accounts, loses a lot of money trading, that's not a good teacher, right? It's not okay to take losses and blow up accounts. It's okay to get stopped out because that's a business expense. But blowing up accounts, the problem is you guys have normalized blowing up accounts, and that is not tolerated in a real business environment. You blow up an account on Wall Street, your next job is going to be janitor, not trader. And you'll be lucky if they even let you in the door of the firm. Right? When you blow up accounts on Wall Street, security escorts you out of the building. You don't even get to stop at your desk. They clear out your desk and they kick your ass out. Right? There's no second chances. Yeah, would you like fries with that as your next job? Exactly. It's a ruthless business. So when I see people on Twitter going, "Oh, I lost 300 grand," and everybody's patting them on the back, "Oh, thank you for being transparent." Right? No one's going, excuse my language, I'm going to say it. No one's going, "You fucking idiot. What did you do? Why'd you do that?" Right? That is lacking in our society, and unfortunately that creates complacency, bad habits, and more losses. So if you're tired of that, if you want straight talk, if you want to learn how to do this, right? Don't don't normalize losing lots of money, right? That's not tolerated. This is not a genteel business, right? And I'm sorry if I offended anyone, but that's business. Business is difficult and it's warfare, right? So blowing up accounts is not tolerated, right? It means you don't know how to manage risk and you're trading probably at the wrong time, right? There's 43 and a quarter. See how we're selling the inventory from 32 to 37? We're selling it higher. So if you guys are tired of blowing up accounts, if you're tired of losing money, come to the trading syndicate. We will teach you how this business works so you can make intelligent business decisions, right? This is one of the hardest businesses as a retail trader because you have no support. You have no education, you have nobody telling you that's not a good thing to do. That's a bad risk to take, right? Whereas you work in the industry, you have a compliance officer, you have a credit manager, you have the owner of the firm, you have the head trader, you have the person who's mentoring you. So you got 4 to 5 people sitting, they basically, they're in your business all day. Why did you take that trade? What are you doing? Get rid of that, right? You don't have that when you're a retail trader. You're sitting alone at home and you're all by yourself and you're like, oh, this is a good idea, right? But if you don't understand how the business works, how can you possibly make any money? Right? It's very difficult. It's very difficult. So we try and help you maintain a level course. We try and help you understand the business for what it is so you don't have to rely on trading psychology and all of those things. You can rely on business skill, right? And we teach you how to build your skill so you start making little bits of money and keeping it, right? That's the key, right? Like my old boss, Mr. Thompson, told me, you know, in 95, he said, listen, kid, you don't have to make money every day as long as you have money the next day to do business, right? Some days are going to be crappy and you're not going to make any money, right? Don't burn down my house, right? And this is a man who grew up in the 30s, and he used to sell investments door to door, and he worked his way up from nothing to being worth $600 million. So I learned from people like that. My other mentor started in the mailroom of a brokerage firm and became a multi-billionaire. So I have learned this from billionaires. These are the people who I used to do business with and trade for. I'm trying to teach you guys how to adopt what we call smart money mindset. And smart money mindset means you only trade from an edge when the terms and conditions of business suit you. Right? When your terms and conditions are met, then you take the trade. If your terms and conditions are not met, you tell that trade to go pound sand. Right? You've got to be very, very, especially in this market. This market is a killer because you've got fake news, weird news, bad news, all sorts of political risk, all of that stuff, and they throw that crap at you guys all day, right? So you got to be able to cut through all of that and zone in on the chart because the chart's telling you what's really happening, right? So what's really happening is there's a seller at 43, they move down to 41, now they're at 39.5. When this next candle opens, let's see, but you can see that this was the accumulation zone, right? Remember the accumulation zone? And we are distributing above it until we have to put it on sale, and then it'll come back down into here. If we don't have to, we'll still just go sideways here, right? So come hang out with us at the Trading Syndicate. We will teach you how to do this, right? We'll teach you how to make a living, a sustainable, practical living. Thank you so much, everybody. Have a wonderful day. We will see you at 9 o'clock. Stay out of trouble. Don't take candy from strange market makers. And thank you for joining us on YouTube, everyone. Have a wonderful morning. Bye for now.